So those are some numbers that we'll incorporate, and I think we're going to look here and see how that might impact the price. Bill, you want to talk about this a bit here? What we're trying to do is go back in history, and I don't know how well that's showing up back there, but this is a continuation chart and some of the ranges and what we might expect with those different yield scenarios.
Yeah, one of the biggest things that we're trying to comprehend right now is that we're really in a sideways trading market. We've got basically a floor established. We think the upside is limited. And when we're talking about upside and limited, especially in corn, is the realization that I was slow to discover this, but our stocks to use ratio in wheat domestically is 52%, which means we've got a half a crop in the bin that's not being used. So what that really does is cap the wheat market, and it also caps our corn market. So the bottom line is we've got a low of consequence that's been established for a period of time, and we've probably got an upside limitation. We've got fantastic demand, our ethanol is good, our exports are good, but the bottom line is we're still going to have adequate supplies of corn and substitutes for an extended period of time until we get some sort of a supply disruption. Our upside is limited. That reinforces the ideas that we need to make value-based sales consistently. So when we get to the upper end of the range, we just have to make sure that we reward the market without much hesitation.
When you look at that, the last 2 summers, we've rallied towards the 440 level and 450 level in the December futures. That's kind of in that area that we would suggest if we start to see low enough acres or we start to see a weather concern. Those are some upside targets. On the downside, that 340, 330 in recent times, we have on there $3, but I think with what we've seen with the shrinking of the carryout and the good demand, we'd look at that 330 area as an area that would be kind of well supported if we did grow another big crop or the acres were bigger than we thought. This is the 2017 chart. You can see, as Bill said, we're just trading back and forth in ranges. We're kind of exploring the upper end of the range, but we are starting to turn this market, kind of what we have done in wheat, is curving it towards the upside here. And as we go forward, if we start to see that planted acres report come out in March 30th and say, oh yeah, we do have 90 million corn acres or 89 million corn acres, that may be the reason that the market decides to move to higher levels. The other thing the market's always sensitive to is we figure crop insurance in February, so that may be another reason if they really think we're going to shift away from corn that they start putting some more premium into December corn. So that gives you kind of an overview of the technical side of it. This is the old crop March futures, same exact pattern when you look at that real sideways pattern. Generally that's a sign of a bottoming market. The other thing we've seen in the last 10 days to 2 weeks, we've seen some really violent days. Crude oil is a good example. So whether you're at the top of a market or at the bottom of a market, when you start seeing some of these pretty big gyrations, it could be a sign that the markets are starting to trend in a different direction.